Hello, my name is Victor and welcome back to the channel. And today, no more Mexico jersey unfortunately because they were knocked out by England in the World Cup. But I decided I was going to wear red today because I am in full support of Spain. You will never catch me supporting Messi in my lifetime. And also, we have to discuss Netflix, who just had their quarterly earnings for Q2 of 2026. So let's not waste any more time, let's get right into it. Oh, and almost forgot, I sold out completely out of one position in my portfolio, so be sure to stick around until the end of the video to find out what that stock was and also what I did with the capital. But okay, Q2 of 2026 for Netflix, and of course we're going to start off with their income statement and analyze what happened. And we're going to kick things off right from the top. Top line revenue up 13% compared to this time last year. Not too bad, but also not great, especially as we're going to make our way down the line here, because cost of revenue was also up 13%. Sales and marketing was up 16%. Tech and development up 22%. So I'm sure I don't have to explain this, but if your costs are growing at a higher rate than your top line, then your operating income is going to suffer, and that is exactly what happened here for Netflix. Because operating income was up 11%, which again is no surprise considering how much faster the expenses are growing compared to the top line. And as we make our way down to the bottom line, we can see that net income grew 9%. Absolutely meh kind of quarter here for Netflix. Top line was not impressive and the bottom line was even worse. And we're gonna go right into the next statement that I want to analyze for Netflix, and that is going to be the balance sheet. And I will go ahead and tell you that their balance sheet looked so much better compared to that income statement. So let's have a look. And we're just gonna look at the big picture here when it comes to the balance sheet. Total assets were up 5%. Total liabilities were down 2%. So the reverse of the income statement, if your assets are going up and your liabilities are going down, that is what you want to see, because that means that stockholders' equity is going to go through the roof. And that's exactly what happened, because stockholder equity for Netflix was up 13% in the quarter. Love to see it, and even better, you know that I love the debt to equity ratio, which takes the total liabilities divided by the stockholders' equity. And when I did that, I found that the ratio is 0.93. And that's exactly what I want to see when it comes to this ratio, because it means that the company is managing their debts well. I, for one, do not want to be in a company that is just drowning in debt and continues to increase that debt quarter over quarter while their assets continue to dwindle. So all that's left now is to look at the cash flow statement. And again, we're just going to look at the big picture here when it comes to that, but let's go ahead and analyze that right now. And as we can see here, net cash provided by operating activities was down 28%, not something that I wanted to see. And when I did a little bit of research, I highlighted these two lines here in red because accounts payable and the line right below it, accrued expenses and other liabilities, were massively in the red compared to this time last year. And when I did a deep dive on what exactly happened here in the quarter, I found that it's actually the aftermath of the Warner Brothers termination. Because of that termination fee that Netflix got, because it all fell through, they have to pay taxes on that. So in a nutshell, when I did my research, I found that it is accrued cash taxes that they are having to pay, which, as you know, Uncle Sam always gets their cut. So that's what I found to be the majority of that in my research. And as we make our way down the line here, we can see that net cash used in investing activities was negative, which is what I want to see. And I made sure to highlight here in green purchases of property equipment. They are using a ton of money going into this line here. And that's honestly what I want to see, because Netflix, although it hasn't looked like it over the last couple of quarters, is a growth company. So you want to see them focusing on growth, buying up property, buying up equipment for new shows, whatever it may be that they need. And the final line, but one that really caught my attention, is net cash used in financing activities, well in the negative as well. But even more impressive is this line right here. Repurchase of common stock was almost 4 times more than this time last year. And to me, that is perfectly what I wanted to see, because I want outstanding shares to decrease, especially given a time like right now where Netflix's share price is so low. I want to see the CEO and the board of directors taking advantage of that, which is great for me as an investor because now my slice of the pie is that much bigger. But all right, so we saw that operating income was down from the cash flow statement, but they are repurchasing a bunch of common stock. The balance sheet looked solid, but the income statement, well, it was lackluster to say the least. And as for how Wall Street took these earnings, I would say it's not an understatement to say that Netflix fell off an absolute cliff. But if you ask me for my opinion, I actually don't think it was because of these earnings. I actually think it was Netflix's guidance for the upcoming quarter. Because if you're not aware, Wall Street is always looking ahead into the future to see what we can expect for any given stock. And Netflix actually gave us their guidance for this upcoming quarter, Q3 of 2026, and they stated that they are expecting revenue, that top line, to grow by 11.7% compared to this time of 2025. And while I do understand that it is a decreasing number because we went from like strong middle to high teen growth for Netflix over the last year or two, to now we've been about 13 to 12%. Now we're not even hitting 12% growth on the top line. So it is going down over time, and I get why Wall Street would get spooked by that. But again, if you ask me for my opinion, for Netflix to be about 67 to upper 60s per share, it is a complete overreaction on Wall Street's part. Again, if you ask me for my opinion. While yes, it is fair to say that Netflix has been struggling when it comes to that top line, and they haven't really been very clear on their subscriber count, at least over the last couple of years that I'm aware of, but I'm still holding strong to my projections that I gave for Netflix in this video right here if you want to check it out. But if you're just here for the footnotes, in that video, I gave my projections in my bear case for Netflix to be $91 by the end of this year. And in my bull case, again, through the end of 2026, in my bull case, I would have had Netflix at about $150 per share, which is well over a double up from where Netflix is right now. And I want to put a pin on this topic here for Netflix. We will come back to it at the end of the video because now I want to talk about the stock that I sold out of completely in my portfolio. And if you're a longtime subscriber here of the channel, I'm sure you can probably guess it based on the news that we got earlier this week. But the stock that I completely sold out of is PayPal. And the reason for that is because we actually had Stripe and Advent offer to buy out PayPal completely, and they valued PayPal at about $60.50 per share, which on the news immediately had PayPal shoot up by 16% on that day. Again, if you watch my videos, you know that I have already been incredibly discouraged when it comes to PayPal and their performance over the last 2 years specifically. So I had already talked about potentially selling out of my PayPal position. At least I was going to give PayPal until the end of the year before I made a final decision. But I did mention that PayPal could have been potentially a buyout target, and lo and behold, here we are. So I completely sold out of PayPal in my portfolio. I did end up losing money because of PayPal. I had a small position, again, 1% of my portfolio, and that was me buying shares outright and also a Leaps option that I had bought a couple of years ago. So not too thrilled that I lost money on the position, but because it was so small, I wasn't too worried about it. Now, am I going to kick myself over the ultimately what ended up being a mistake of getting into PayPal? No, of course not. As an individual stock picker, I have to have the understanding that I'm not going to bat 100%. Nobody is. Not even Warren Buffett or any other famous investor has had a record where they absolutely got every single stock right. It's just not something that's possible for us humans. I'm going to make mistakes and that's okay, but ultimately I want to learn from my mistakes. And PayPal ended up being a value trap, which now I'm going to be a little more cautious of whenever I see a stock in the future that has a PE ratio that's about 10 or under. Let me go ahead and tell you, the next time I see a stock that has such a low PE value, PayPal is immediately going to come to mind and I'm going to have to double check myself before I make a decision. But what is exciting is that I have extra capital now in my portfolio, and what did I end up deciding to do with that extra money after clearing out PayPal of my portfolio? Well, as it so happens, SoFi, which is a stock that I talked about, if I were to ever get out of PayPal, I had SoFi already on my radar. And it just so happens that the day that I got out of PayPal, SoFi was also down about 3%, but did I end up just shifting the money and buying SoFi stock altogether? No, actually. I ended up deciding to sell a put on SoFi instead. And the reason for that was because SoFi has actually seen a lot of weakness throughout 2026, and it might continue here for at least the next couple of months. And I think, in my opinion again, I could potentially increase my capital, or alternatively, I could get assigned on one of these puts sold, and that way I would get SoFi at a cheaper price, which I am also okay with. So to me, it's a win-win no matter what happens. And if you're interested on the details of this put sold on SoFi, my premium was $25. My strike price was $14.50, so that gives me a projected profit of 1.7%. Generally, when I sell puts, I want to have a projected profit from 1.5%, if not 2% or higher. So 1.7 seemed right in that in-between zone, that sweet spot, and I had to take advantage of it. But that's not all I did with the extra capital that I had from selling PayPal. Again, as it just so happens, right when I sold out of PayPal, Netflix fell like a rock. So I've been buying Netflix throughout 2026 as it is. If I am given an opportunity to get into the stock at an even cheaper price, I cannot give up that opportunity. So I am going to continue to buy Netflix heavy through the rest of 2026, and that is exactly what I did with a portion of that capital just this past week. And ultimately, I want to be able to grow Netflix to maximum 10% of my portfolio. So if I am able to dollar cost average into the position, that's exactly what I wanted anyway. So after seeing the quarterly earnings, analyzing the numbers, again, this is based off of my research. Do not make financial decisions based off what some guy on the internet says. This is all my opinion. Do your own research and make your own decisions. But for me and my portfolio, I am going to continue to buy heavily into Netflix. So long as it's anything under $70 a share, I'm buying heavy. But I would love to know, do you own Netflix in your portfolio, and what are you doing with your position after Q2 earnings? Are you looking to buy more with the price down, or are you done with Netflix and are you saying, you know what? I cannot handle this type of volatility in a stock. Be sure to let me know in the comments below, and by the time that this video is posted, we will know the winner of the 2026 World Cup. Please don't let Argentina win. And be sure to let me know who the ultimate winner is down below. As always, thank you so much to my subscribers, and I'll catch you in the next one. Peace.